Welcome back, investors, to Ticker Time News. I'm Adam, and I am sorry that I missed you guys yesterday, but I'm doing much better today, and we're here. We're going to talk about the market. We're going to talk about Salesforce, ticker symbol CRM, and I'll let you know why, too, in just a moment. But first, the market today, well, it was in a bit of a positive bias for the most part, coming off a very weak start to the month of December. The S&P 500 has closed red 8 out of the last 9 sessions and has logged 5 straight losses to begin December. According to Bloomberg, that is the worst start to the month of December, and for the S&P 500, going all the way back to 2011. I almost said, I don't know what I almost said, but some combination of number that wouldn't have made sense. But going back to 2011, this is the worst start in December for the S&P 500. Now, before we dig into the charts, I first wanted to discuss and talk about Salesforce. Ticker symbol is CRM, and we'll get that plugged in here so we can look at the chart too, because it's kind of important. First, the chart, and then we'll talk about what's happening with Salesforce. I need to bring it up just slightly here to get the lines matching back up again. There we go. Okay, for Salesforce, the reason I'm talking about Salesforce, CRM is the ticker, is because it was requested by you on our Discord server. So I am happy to talk about it, dig in, do a little research, find out, what's going on. They had earnings just a few sessions ago, maybe a week or so ago, and they sank. They sank. So we're going to talk about Salesforce and what's happening. But first, the chart. If you notice this yellow rectangle right in the middle of your screen for CRM, that is going from basically their last earnings report forward in time. There's a vertical line right about, oops, sorry, hold on. I thought I had my highlighter. I didn't. All right, now I do. Okay, if we look at Salesforce on the chart, CRM, this was their last earnings report, okay? And then if we go, there's another vertical line. It's right here. This was their last earnings report. And basically, for the past 3 months, CRM has been trading in a rectangle going nowhere, right? Just up and down, up and down, up and down, going nowhere. Then this past earnings came. Guess what? Investors did not like it. Now, the day of earnings, the stock went up over 5.5%. But from that peak to the trough, which is the bottom down here, that's just about 20%. So Salesforce traded down nearly 20% in the days following its last earnings report. And if you look at where the volume tag is for this down here, since earnings, volume has been declining. Relative strength, declining. Momentum on the MACD, declining. And of course, price declining. Everything looks super scary here when you put it into the context of this stock chart and how it's been acting since their earnings report. So what happened to Salesforce in their earnings report that caused this drastic sell-off, lower volume, lower strength, lower momentum? Well, for their Q3 earnings, which is what they just reported, I'll pull it up right here. Oops. Hold on. I needed to discard my highlighter. There we go. Earnings, revenue for Q3. The headline numbers were actually quite good. And CRM had another double-digit EPS beat. And their revenue was basically in line, 7.83 million, 7.82 million was the estimate. So nearly 10 million beat, which isn't much, I know, for a big company like this. 10 million is not much when you're bringing in nearly $8 billion. But even Q4 guidance was pretty solid. Revenue guidance was a bit light, but not as bad as feared. We think there are two main things driving the stock lower since earnings. Okay. Number one is that co-CEO Brett Taylor, he suddenly announced that he will step down on January the 31st, and he's going to return to his more entrepreneurial roots. Now, Mac Benioff will be chair and CEO. Then, number two, despite the pretty good guidance, Salesforce made some cautious comments on its earnings call, and I think that may be scaring investors a bit. CRM's flagship Sales Cloud grew 12% year over year and a healthy 17% in a constant currency. Okay? Constant currency. You're going to hear me say that quite a few times as I go through these numbers. But if you look at the dollar, where the dollar was last year versus where the dollar is today, and we can do that, right? Ticker DXY is the dollar. You can see it has come off in its strength here, but it is still within its weekly expected move this week. Let me raise this up a little bit. I don't want to mess the chart up too well. Actually, you know what? It doesn't matter. Let's just do this. Okay. Let's go back one full year, December of last year. So you can visually see where the dollar was a year ago, which is above my head, and where the dollar is today, just under its 200-day moving average. Now, constant currency means that if the currency remained constant, level, these are the numbers that would have been reported. So I want to make that clarification, because when you're trying to compare apples to apples, you also have to take into account things that have changed. And the dollar rising quickly this year is a big change. So comparing the dollar last December to the dollar this December, that's not comparing apples to apples. That's comparing an apple to an orange, right? Or a circle to a straight line. You need those two apples or the two circles to make a fair comparison. So that's one reason why I think investors are selling the stock like crazy right now. Let's go back to CRM. I think I can do it this way to keep the chart from being messed up. Good. Everything's still pretty much in line. Just need to bring it up a little bit. Get the volume lined up. There we go. Okay. So let's go through these numbers. Sales Cloud grew 12% year over year and 17% in constant currency, including customer wins at Bolt. You know Bolt. Snowflake, that's a pretty big company, Snowflake. And the oh, I don't want to see that in our comment section. Oh boy, here they come. Here they come, indeed. Just ignore those comments, okay? Okay. Oh, did okay, now okay, I think we're back now with the volume. Sorry about that. I think volume cut out and I think we're all plugged back in right now. I think it was just loose. Okay, so we were talking about the two main factors: the co-CEO Brett Taylor suddenly leaving, and then the pretty good guidance, but Salesforce made some cautious calls on their earnings call, which got investors spooked. Now, we were talking about the Sales Cloud and how it grew 12%, and it grew a healthy 17% in constant currency, including customer wins at Bolt, Snowflake, and Thermo Fisher. Now, Service Cloud, that grew at 12% and 16% in constant currency. Marketing and Commerce Clouds grew 12% and 18% in constant currency. Then we have the multi-cloud adoption by its customers that continues as customers with 5 or more cloud services increased at an annual recurring revenue of over 20%. That's an incredible number right there. ARR, annual recurring revenue. I love that. I love when companies have ARR, and Salesforce was up over 20%. That is impressive. Also, 7 of its 13 industry clouds grew its annual recurring revenue above 50% this quarter alone. This quarter, 50% in that annual recurring revenue. Now, despite the good Q3 results and solid Q4 guidance, the company did sound cautious on its earnings call. Specifically, CRM had noted on its last call that it was seeing more measured customer buying behavior, and it began in July, which led to elongated sales cycles. Additionally, deal approval layers and deal compression, particularly in enterprise, as Q3 progressed, CRM saw an even more challenging buying environment, driving intense customer scrutiny on every investment dollar, every last penny. Now, this behavior was most pronounced in its US and its major European markets. Quickly, though, on the note of the CEO news, investors seem to be reacting negatively to the news. We think the suddenness of the announcement, and there was a bit of rumor that there was some friction between the two CEOs going back at least a few months. But remember, it was only a year ago when the two became co-CEOs. So Taylor and Benioff, they were not CEOs for that long. Co-CEOs, I should add. Taylor, though, Taylor is known for his impressive technical background. As he was a co-creator of Google Maps, He was CTO of Facebook, and he's credited with inventing the like button on Facebook. He says, like I mentioned earlier, that he wants to return to his entrepreneurial roots. Don't we all? But investors' minds tend to wander around the question of why would he leave? Now, regardless, it is a loss for Salesforce. Overall, Salesforce posted solid results and guidance. The sudden change at the CEO level was a surprise and is likely contributing to the weakness in price action that you see on the screen in front of you. Also, CRM's comments about cautious buying behavior by customers, that's a concern. However, it's just the latest in a series of weak results / comments from cloud-related companies just this earnings cycle. And it's going to get worse. But most notably from Amazon's AWS and Microsoft's Azure, among many others. Just a couple of weeks ago, NTAP, it signaled out its cloud business as being impacted by increased budget scrutiny. This is definitely a bit of a dark cloud over cloud computing budgets right now. So do proceed with caution. While Salesforce took this nearly 20% fall since the peak of its earnings to the trough, it may not be over just yet. This dark cloud may hang around cloud computing until we hit, and let's go over here to the sector rotation. It may last until we are right there, close to the bottom of the contractionary period that we are going into, the recession. So while Salesforce may look pretty good at this discount, trading at 130 a share, I think it could go lower. Now, if we look back in time, let's get this chart consolidated here. I just want to give you a perspective. Almost there. Hold on. It loads just a little bit slow during the live stream. Okay. All right. Here's what I want to show you. All right. Where we are right now. Let me move this dot because that's not. There's a highlighter mark. Oh, no, that's the vertical line. Okay, and did I get it? Okay, I got it. I just wanted to be clear what I'm showing you. Now, Salesforce right here, when we go all the way back to March of 2017, okay, and we take into account all of the price action going back to March of 2017. This price point right here, okay, which is, again, it's right here, 155 a share. That's a significant price point, okay? There's been a lot of action traded around 155 a share. But today, we are lower than that. We are at 130, okay? Now, if we go back in time and look at $130 a share, that's the bottom of the March 2020, okay? That's the low there. And then we go back even further, we can come back here and we can see this double bottom right here. 130 wasn't quite the low, The low is around 120 and that double bottom there. And that's 2018. Remember, the markets all pulled back from a high to a low in 2018, and it wasn't good. Okay. It finally bounced out of that, but then it traded sideways. So if you're looking for CRM and where could a low potentially be, obviously earnings are going to play a big part in that. But if we're looking just technically, just pure technicals here, the 120 in area looks pretty significant. Okay. Just going back on this chart and looking at price action, looking where lows were, highs, and so forth, it looks like that 120 a share is a very interesting part. Very interesting. I think I'm going to, myself, I'm going to set a stock alert for Salesforce at 120. At 120 a share. So let me open this up just a little bit. Go back to the beginning, or go back to where we are currently. Okay. All right. Let's go back here. I'm going to put a stock alert. Oh, come on. Got to raise you up just a little bit. There we go. And I'm coming down here to 120. I can adjust it right here. All right. So I'm going to put the value right at 120 even. Only needs to go off once when it's crossing below it. Okay. And it's right now it's going to stay open. This is January of 23. Yeah, let's just run it through the 1st of January, see what happens, and I'll reevaluate it then. Just giving it the month of December to kind of digest. CRM 120. And I'm just going to put right here, CRM crossing below 120 a share. Okay. I'm going to save that. And then on TradingView, it's a orange dotted line that shows up for you right there. And if you hover over it, it'll give you your little alert tag. And obviously you can put in what you want the alert to be. But that's what I'm going to put in there. 120. If it doesn't get that low, so be it. But if it does, I'm going to watch it a little more carefully, because then I think it becomes really interesting. It may not do it. As a matter of fact, the probability of it doing it during December, I think, are low. Okay. This would probably be more realistic into February, March of 2023, maybe going into Q2 reporting, or maybe Q1 reporting. It all depends, right? There's this timeline that we're on, okay? And where the recession falls on that timeline is going to determine a lot about individual companies like Salesforce here, okay? So if Salesforce is hurting next go around because of the comments they made on their earnings call about customers, watching every penny that they're spending, well, then I think we would reevaluate that 120. Okay. And again, this timeline that we're on, I don't have a crystal ball on when that recession is going to hit. but I believe that one will. I know jobs data is holding up, but it is slowly declining a little bit, but it is holding up rather well. So let me throw this up here too, just in the conversation of Salesforce. I think, yes, in the long term, it will be good as a long-term investment. I do think that. Salesforce has been a giant of a company, and it's really, really focused on enterprise. Like, that's the jackpot there. Customer management, customer acquisitions. I mean, there's so many things a company can use Salesforce for. Um, Instead of building your own internal systems when you're starting a business, going with and using a company like Salesforce, especially if you are sales focused, um, with your revenue, then being able to track every mention, every conversation, every word exchanged between, one of your sales people and a customer is extremely valuable. And Salesforce allows you to track that. Plus, Salesforce is way more than just customer acquisition and management. Um, a huge company, and I do think it is a good long-term investment. With the co-CEO breakup, Benioff, he has been a part of this company, it seems like forever. And he's made a lot of good choices over the years. So I don't think there's a reason to necessarily say that just because Taylor left, well, Taylor was a very creative force, right? Very innovative. He could have done a lot of good at Salesforce. But sometimes, you start working, co-CEOs like this with Benioff and Taylor, and you just start rubbing heads, rubbing ideas, friction starts to show up, and that friction can hurt the company more. So I wish Taylor all the luck in the world, and I hope Benioff has the smarts to keep innovating with Salesforce so it doesn't become a lagger, right? And let some other company come up and try to take them on. I know a bunch of companies would love to do that. So I'm just kind of ranting, rabbling here, not really making too much sense with it, but just my thoughts coming out, just thinking about it. I do think it's Salesforce is a good long-term investment, and thank you for asking as well. Okay. So that's everything that I wanted to say about Salesforce. I do want to get into the market and the charts, especially the charts. But I see this question here, and I don't want to miss it. SQM. When I get my cursor back over here. Let's see here. I am not familiar with this particular company, but we can look here. I see a head and shoulders pattern. All right, let's see. Well, profit margin has been doing pretty well. Year to date, good, but recently it's kind of poor. Year to date, it's up 78.9%. It's down 20% in the past 3 months. So the last quarter. Interesting. Okay, let's see here. Is this a mineral company in Chile? Fertilizers, potassium, nitrate. Oh, yeah. Lithium chemicals. It operates through the following segments. So, being located in South America and offering fertilizers and other industrial chemicals, that's pretty good. For medical, pharmaceutical, agriculture, industrial applications. I mean, lithium here for batteries. I mean, this is just incredible. Um, Heat resistant glass, air conditioning chemicals. Yeah, this looks like a pretty interesting company, and being located in South America is very, very interesting. Okay. All right. So right off the bat on the chart here, let's see. I want to get a little more context here real quick. Largest producer of lithium in the world. Wow. Wow. No wonder this thing shot up so much at the beginning of this year. I mean, you look at this on the chart, and you can see right off the bat, there was a big move at the beginning of this year. Could that move be slowing down or potentially reversing as some of the hype comes out of EVs as we go into a recession? That would be one of my big concerns. It is interesting that this big move sent it way, way up above its 200-day moving average. It came down and tested it in October of this year, broke through for a moment, but picked right back up, and it looks to be right around Thursday, 13th of October, which was that big down day, down intraday for all the markets. So that would be one of my concerns, because when you look at the volume shelf profile here, when I go back to, geez, where are we at now? Back in 2020, December 2019, as a matter of fact, you see this red line coming across close right here, this red line right here, and it cuts across all of this, right, all the way through there. That's at right around $55 a share, and that's right around January of 2022, and then this thing just took off. Okay, so a concern of mine, and one more thing to point out too, this 200-day moving average, when it was tested right there back in October, look at what is happening currently. Okay, currently today it dropped 4%, and it is hovering right above its 200-day moving average. Will that become a problem if it breaks down and breaks through that? That is a concern of mine as well. So, two things just right off the bat. Are we potentially looking at a company who got overhyped? Stock price went up because of that, and now it's coming back down. Also, in the same vein, is it coming back down due to recessionary pressures? Because it looks like this thing it hasn't been a stock that has, spent a lot of time above $90 a share, above $50 a share. Unless I can go back further and maybe it's come down. No, it looks like it has not. So let's go back to this peak right here. When was this? 2018, and the peak was right around $50 to $60 a share. That seems to be the price that investors think the company is worth, going back to 2018, going back to 2021. I mean, this company doesn't like a recession. All right. If we just look at how the company acted in 2018, okay. So let me show you this. So there's 2017, November 20. Okay, January 2018. Let me go back to the very beginning. I want to get the price. All right, January 3rd, 2018. It was 61.42 a share. Okay. 2018, we sell off, right? Look at this. All of 2018 was a down year for this company. Now, it doesn't like a recession. We can see that on the chart. It's a materials company. Materials don't do good in a recession. However, I'll put one little caveat on that for this particular company. Since this company obviously is going to be a player with EVs, EV sales will hurt during a recession. However, EV sales will be going up while ICE engines go down. Okay. So that's a plus over the long term. Also, with agriculture, this is a big component. Agriculture, it's going to become more localized, especially with all the geopolitical problems we have in this world. That's a plus for this company in the long term. Now, in the short term, I really see a head and shoulders, and let me point it out here for you. First, we've got shoulder, okay? We've got the head, and then we've got this other shoulder over here. All right. And we have a neckline that is right about here, lining up with that 200-day moving average. Now, when I pull up the chart patterns here for you, and let me just go and look at one more thing. So we are coming from down and then up, right, into that head and shoulders. All right. So let's look at this. Head and shoulders are up here at the top. All right, right here. Okay, there we go with the highlighter. They are typically a reversal pattern. Okay. This top square right here. So we came down and then we came up into the head and shoulders pattern. You got the left shoulder, the head, it goes up higher. The right shoulder is smaller, and then it breaks down. Okay. So what are we seeing here? Price came down and then it hit this bottom on the 13th or 12th, right about here of October. And then it came right up and into, there's the first shoulder, there's the head, and here is the second shoulder. And now it's right there on the neckline. If it breaks down, okay, then it's going to go down here to retest this October 13th low. Or at the very least, it could come down and catch support right about $82 a share. If it breaks that 200-day moving average, which it is literally hovering on right now, 200-day moving average is 90.93, and it closed at 91.55. See, going into economic slowdown, a material company like this who is producing the raw elements, right, for the manufacturers, don't do good going into an economic slowdown. So I could be wrong, but I think what we're seeing here, I think we're seeing the top for a while. And this will probably start to come down. And just continue to get weak as we are going through sector rotation, where, and let me clean this up, and just to kind of show you again, for the past couple of months, or maybe a few months, I've been thinking that we are right here in the 6th stage of the cycle, okay? And during that time, you have bonds and commodities and stocks, they go down. What goes up? Nothing. Nothing goes up. So I think we're at the tail end of this, and going into 2023, January, February, March timeframe, I think then we're entering stage 1, okay? And in stage 1, stocks and commodities continue to go down, while bonds right here go up. This would be like ticker TLT. That would be a good bond to ride out stage 1. Because then when you get to stage 2, which is the actual bottom of the recession, that's when stocks start to go up and bonds continue to go up while commodities continue to go down. Now you start pulling out of the recession, you start to grow again, you get out of the contraction phase, and during this time period right here, that's when everything is going up. That's when bond, stock, commodities are all rising. So that's why I'm thinking, even looking at the technicals here, this company may be peaked for a little bit, okay? I think there's a good probability of that. I just want to point out, though, agriculture is going to be very important for a company like this. And Russia's been a big producer of fertilizers and such. Maybe this company can step in, maybe to handle some of that. I don't know a whole deep ton or a bunch about this company, but just some first level thoughts here on this company. Not a deep dive in any sense of the term for this company, but EVs are also going to be important as well. So my quick thoughts there, the chart pattern. Hopefully I didn't go too overboard and bore you talking about this, but I also hope that you got some value out of this as well. All right, let's go talk about the markets. I definitely want to do that because I think the markets in December, more importantly, could be a sideways month, right? It could be a sideways month. All right. I forgot to take my stop loss alert off of here. All right, come on. Oh, no. Okay, never mind. I'll worry about that later. Okay, so things got started today on an upbeat note. Let's go to the 5-minute chart here for the SPX. All right. Remember, yesterday we weren't here. It was this choppy sideways movement. But the 2 days before that, okay, we had that perfect down sloping channel, that down sloping trading channel. Remember that? Well, if we were to find the low, which was right over here, and we try to, find something, we're not really going to find a trend here, are we? A trend that maybe we could say, hey, look at where it's moving. Well, if we look at this line right here, does it really set us up for a trend potential? I think it does. It's not very steep, so this isn't going to move very fast. But if you notice, yesterday, what did we do? I mean, after the downtrend, right? Really, all we did yesterday was chop around and cause people to lose money. That's all we did. This was the chop box for yesterday, and it caused people to lose money. Now some were able to identify it. Now look at this trend line. Yesterday morning, okay, it follows this trend line. There was a little breakdown. It used it again as support, and then it really broke down. Okay, so then it was done. But then today we get a gap up right there over that trend line, nearly sitting right on it. We get a huge rally out of the box, right? But then after that huge rally, the S&P 500, it faded back to test yesterday's closing level, which the closing level was down here around 39.33. And again, this is right here before the big breakout. It's the gap up. It rallied real quick out of the gate, and it pulled back to retest that. Buyers stepped in, and they defended that line, which aided in investor sentiment. A bit of a turnaround from the drastic falling over the past couple of days. Now, the market hit a bit of an air pocket this afternoon when it just completely dropped, right? That would be right here, where it came back down to this trend line and it found support there. Now, this air pocket where the market dropped was due to news that the FTC is suing Microsoft. Why? To block the acquisition of Activation Blizzard. They want to block it. But yet again, buyers showed up to help stabilize the market, and the main indices ultimately closed around the level seen before the Microsoft news emerged. And you can see it. It followed using this trend line as support. So I am going to be very curious. Oh, you're absolutely welcome. Anytime. That's what this live stream is for. This live stream is to answer your questions. You're very welcome. I greatly appreciate your time and your question. Okay, so we do have this trend line. We are slowly increasing. You notice the difference here between the beginning of the week where we just, boom, in this slow nervousness of a climb that we are in right now. Okay, so I'm going to be watching this very closely, this trend line, to see where it may take us. Okay, as we go into tomorrow and next week, because we've got a lot of potential bad news or good news. Oh, I don't want to miss it. 4:15 by the end of next week. Well, let me go to the daily. I got to fix my chart here right quick. There we go. So since we're talking SPY numbers, let me go to the SPY. And if we look at the SPY, the weekly expected move for this week on the upper end was 413. 413. The lower end of the weekly expected move was right at 400. Okay. We're not there, and I don't think we are going to tag it. It's possible. Maybe we do tag it. But why did we float up today? And that's all I'm going to call it. I'm going to say that we floated up today. Sure, some buyers stepped in. But yesterday, we were disconnected from our 5-day EMA. Most frequently tagged EMA moving average that there is. Whenever we're disconnected, again, the circuit board that I always talk about, whenever we're disconnected on the daily chart, we always reconnect. We reconnected with it today. But as soon as we reconnected with it today, we started selling off. So there wasn't enough strength and momentum yet to hold it up there, okay? We have a couple of things to talk about. We've got declining volume, even though price obviously made a higher high on declining volume. Our RSI, relative strength, is declining. We had the crossover on the MACD, and it's declining. Those are never fun things to see on a chart when you want the chart to be bullish. Now, tomorrow, Friday, look at this. We get inflation data, okay? We get the producer price index month over month, core producer price index month over month, and then, of course, the PPI and core PPI, which is the producer price index, but this is the year over year. So last time this report came out, we were at 6.7% as core producer price index and 8% year over year. So 6.7% year over year core, 8% year over year on the PPI. What are the expectations? Well, consensus is 7.2% for year over year PPI and 5.9% for core PPI. Month over month is basically the same consensus as what we actually got last month, which is 0.2% for the PPI month over month. This is a read on inflation right here, okay? And if you look at the chart. it's been, for the last 2 months, it's been pretty steady. Month over month. Okay. And we go look at core. 2 months ago, it went higher. Last month, it came down and it was lower. So this is a bumpy ride that we're on as we continue down this path. And look here, core PPI year over year, it's like we've plateaued and inflation is stuck. Or what would be the call? Inflation is structural. Now, look at producer price index year over year, not core. It continued to come off. Okay. So, what do you think is going to happen tomorrow? Well, I think a good question to ask is, did we, on the stock chart, once we hit resistance, right? And I still think this is very stiff resistance, and we started moving down, have we already priced in the negativity that we could get tomorrow with the producer price index or core producer price index? And then if we want to go a little bit further in time, okay. Oh, one more thing to point out here. For tomorrow, we also, later in the morning, we get the Michigan consumer sentiment. Okay. How are consumers feeling? All right. The projection is that it's going to tick up 0.1% higher than last month. And I suspect consumers are probably feeling a bit of a crunch here in the holiday season. All right. All right. Just want to point that out too. Now, if we go looking into next week, right, what do we see? Well, there's 2 places that I see that are flashing red. So whenever you see the time over here with this burgundy box around it, you know it's important. This is core inflation rate year over year. Okay. This is CPI. And then we get our inflation rate year over year, inflation rate month over month. These are big time movers and they're on Tuesday. Tuesday will be important. But guess what Wednesday is? Wednesday is the most important day in December. The most important day in December. Why? Because this is when Jerome Powell and his buddies at the Fed are going to say, okay, let's raise interest rates. How high are we going? Let's go look at the Fed Watch tool. I should have this. I should have this already bookmarked. I don't know why I don't. Oh, I do. Maybe I should figure out where it is so we don't have to do this every time. All right, let's see what market participants think the rate hike will be. Oh, there it is. Nearly 76% probability of a 50 basis point rate hike. A 24.2% probability of a 75 basis point rate hike. So the market thinks 50 basis points is what we'll get, okay? But then the big question on everybody's mind is, for next Wednesday, when the Fed says higher for longer, and that seems like the motto, higher for longer, how high will the Fed push interest rates? 5% has been like the mark for a while. Now I want to know, are they going above 5%? And if they are, how much higher? Okay. Because I don't think the market is priced in anything above 5%. And then the second thing, remember the motto, higher for longer. So the higher part, how much higher above 5%? And the longer part, higher for longer, how long are you going to hold it at 5%, Mr. Powell? 3 months, 6 months? Or are you going to say, we're going to let the data tell us how far or how long we should keep it there? Now, just remember, if the Fed stops raising rates, there are going to be so many people screaming, pivot. But that's not a pivot, and you know it. Okay, so it looks like we're going to get a 50 basis point rate hike next Wednesday from the Fed, and that'll be a big dog. But inflation, CPI right here the day before, isn't that something? Okay. Just so you can know, month over month here for it, looks like consensus is 0.3%, and we got 0.4% last month. And the year over year rate, there's no consensus, but the forecast is 7.6%. And last reading was 7.7% year over year. And when you look at the chart, you can see the narrative about peak inflation. I mean, just looking at a chart, you can see why that narrative is out there about peak inflation. It looks like it did on this chart. Okay, so here's what I think. I see your comments, and I don't want to miss them. So I'm gonna take your comments here. I think this one sums it up pretty darn good. If CPI and tomorrow PPI, and then next week we get CPI and we get the FOMC meeting, if the PPI and CPI events bring us lower, and they could, because the beginning of the chop box, remember, is right here, okay, is right there. So if we get negative inflation news, it could bring us down to that level, or there's a possibility that, I don't think it's likely, but there is this gap right here that if the news is really bad, it's possible this gap could get filled. But if we do get pulled down because inflation reading was high, then what I think that does for the market is, I think in your comment right here, CPI, FOMC leads Santa Claus rally, it could. Just think if they're negative and it pulls the market down, and the Fed says something about, I don't know what the Fed could possibly say about that, but be negative, maybe that could lead to it. Now, the other scenario, okay, is that we move sideways. CPI and PPI don't really pull us down much, as maybe they just allow us to move sideways and continue trading in this chop box right here, okay? And we could even, bring the line up a little bit higher, like so. Maybe we just go sideways like that, because maybe the inflation data shows that inflation is still coming down, okay? And then the Fed kind of back test that for us, in a way, talking about, technical analysis. Maybe the Fed comes out and says something really positive, and that's something that could send us off for a Santa Claus rally. It's possible, right? Just boom like that. But that downsloping trend line, I think that's the bear case and the bull case, right? We chop sideways, and then on the 14th, December the 14th, that's our clarity day. And we either go up for a Santa Claus rally or we continue moving sideways. I think that maybe some of the bad news had been priced in already. Like, it didn't take much hitting that resistance and then selling off from that resistance. That sets us up for a rally. However, I think we're just going to go sideways. We're going to chop around. The market will be choppy. The market will be on edge. The market will be anxious and nervous with PPI inflation and CPI inflation and the Fed on the 14th, which is next week. But then after the 14th, after we have clarity of what inflation looks like and what the Fed's playbook and what they're going to do, after that clarity, then I think the market could really react. All right. The market has seen this story over and over and over and over all year. And it's preparing for that right now. It's preparing for that story. Okay. Let me know if you have any questions. I would be glad to answer them. I do want to look at the SPX and the Qs while you are bringing your questions in. Otherwise, we can wrap it up for tonight. And of course, I'll be back tomorrow after the market is closed. Make sure to click that like button and share this video with a friend. That helps this channel out more than you can imagine. It really, really does, and I greatly appreciate it. Okay, on the SPX here, all right, I've got this bubble, yellow bubble. And right now, we are making this higher high, or higher low, I should put it, higher low between Tuesday and Thursday, okay? RSI is low. MACD is low. So we do have a bit of a divergence, okay? Even though price made a higher low over the past few sessions, the momentum factor and the strength factor, I don't think we're there for this move. And that's why I think it just went up, tagged the 5-day EMA, and then pulled back down. I really think we're just going to get sideways, choppy moves for a little while. Let's see here. I was thinking of doing a strangle, but Jerome could knock the market down the next day. Here's something that I've learned about the market this week. I'm sorry, not this week, this year, is when it comes to the FOMC meeting this year, we're getting into the unknown part of it, okay? Like, we've known for a while that inflation was high and the Fed had to be aggressive. Then the Fed told us they were going to be aggressive, and we got it. 75 basis points month after month. We got it. Easier to predict. But now we're starting to enter a phase where it becomes a little more uncertain. And when you add uncertainty to the equation, you need to lower your risk. When uncertainty goes up, you need to bring your risk down. Okay? I definitely have learned that in 2022. More so than being in a bull market. Being in a bear market, I've really paid attention to that. So trading on big news event days, at least in my eyes, bring my risk so low that I don't even like to trade them anymore. Not right now, as uncertainty is going up. We know the Fed has said higher for longer. Well, how much higher and for how much longer? We don't know. So that means uncertainty goes up. And again, when uncertainty goes up, you need to bring your risk down in this equation of this market. Okay? So I'm not going to trade anything or have anything open going into FOMC. I am going to wait and see how the market initially reacts, because you can get knee-jerk reactions, and then I'll play my hand, or I'll play the cards that the market deals me. Okay? That's what I'm doing for this upcoming FOMC meeting, because I don't want to be I don't want my bias to affect my capital. Okay? And for me, this meeting, I know it's going to be a 50 basis point rate hike. That's what I think it's going to be. But I don't know the higher for longer part of the equation. And so you're right. Powell could just bring it down the next day. Okay, let's see here. I don't want to miss your questions here. When would you start building a long position for a Santa Claus rally? Well, not until after March 14th. And then there's a lot of variables right now. And all I can do is listen to what the broader market is saying, look at the chart for technical analysis, and see where market participants are moving the market. Okay? They move their chess pieces around, I move my chess pieces around. So I don't want to say start building it now, because I don't have that crystal ball. But if we look at the 15-minute time frame here on the SPX, which is the S&P 500, let's just do this. Let's bring a few days in here, especially get the circle in here. And I mean, you're gonna be able to pick this out. Look at all these days of trading. And where has it gotten us? It's gotten us nowhere, right? Going back to the first leg up here, this is back on November. What would this big gap up day be? November the 10th. We shoot up, and then we start trading. There's the top. There's the top. Then resistance became support, and then we haven't gotten back up to that top yet. We're still right here, slowly coming back up. And then here, and then of course here. It's just a big rectangle. This is the chop box that we've been in for the past month. There's been some cool trades to make along the way. There will always be cool trades to make. But just realize that for the past month, we've been trading in a chop box. So going and looking at this into the future, are we just going to continue, trading in the chop box? Making people believe that we're making big moves, but in reality, we're just going sideways? That's why I wouldn't be able to say this with a straight face and say, start doing it now. We need to wait for the 14th, all right? Because that's when Jerome Powell comes out. He's going to raise rates most likely by 50 basis points, and we should get some clarity. Then, and only then, I think, do we start looking towards a potential Santa Claus rally. And it may just be a mute December, where instead of, because if you got to also take this in mind, seasonality of things. Well, in December, right? December, we typically rally right here. The red line. And this is December. We typically rally in December. And you can look at the other colored lines, green, purple, blue, and go all the way up to the black line. And we rally in the month of December. That's why we even have the phrase Santa Claus rally or Santa rally. But this year might be just a little bit different because we're in a a bear market, and we are going into slower growth, right? Slower growth is not behind us and we're just coming out of it. We're going into it, right? We're going into it. And as we go into contraction, remember the rotation chart here, okay? We don't hit contraction phase, okay, until we exit right here, until we exit stage 6, where bonds, stocks, commodities go down, and we enter into stage 1. This stage 1 over here, this is where contraction begins. And we go all the way down until we hit the bottom down here. And then we start going right back up again. And then we break over into growth and expansion. Okay. So we're right at the end of stage 6 and we are going into stage 1. And the reason that I can confidently say this is because in stage 1, bonds go up. And if we go over to the chart, and I got to take this back to the daily, And that's going to look all messed up. But we need to go over to ticker symbol TLT. That's your longer term bond. And look at what TLT has been doing. I need to open up this chart just a little bit here. Give me a minute while I do this. Okay. Look at what bonds have been doing. Bonds have been going up, 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 just like this, in this beautiful trading channel. And bonds have finally, they broke out of their down sloping, the resistance line. They broke out of that. And bonds are rising after being crushed all year. Right? If I do this, look at where it's come from. December of 2021 is when TLT was at its high, and since December of 2021, bonds have been falling hard. Okay? Falling hard. And when we go back here, when do bonds rise? When we enter stage 1 and all through stage 1. So we are at the very tail end of stage 6. We're entering stage 1, and stage 1 stocks still go down. So when we go and we look at the S&P 500, it's been going down, and I believe it is going to continue to go down. I believe we're going to go down to test the low of 2022 and 2023. So I don't want to sound overly bearish here. I'm trying to be as realistic as possible in thinking about, okay, what comes next. But some of that is an earnings recession. We're going into a slowdown in growth. We're going into a contraction phase in the market. Let's see. I don't want to miss anything. Let's see here. Okay, let's see. I think this might be. Wow, I missed a whole bunch of comments here. What I'm seeing is an extended draw to the downside of the trend line to an extension to the high side leading to 425. Going back to the SPY there. Yeah, the SPY at 400 is real sticky. It's real sticky. And my goodness, trying to clear these charts off. Plus, I don't want to end up reading your comment if it was meant to be discussed amongst y'all in the chat, and I'm just taking up time that I don't need to. Yeah, so we've got the trend line coming down. When we get to 400, yeah, it becomes sticky. We could go higher. If we are looking for how high we could go, the dark black line that starts up here and it weaves its way all through here, this is a year-to-date anchored VWAP. And right now, it is flat right about 410. That's going to be a really hard spot to push through if we do make it up that high. That anchored VWAP, it's going to be tough. And the 200-day moving average might just, depending on how long it takes us to get up that high, might just curl up and meet that anchored VWAP. Okay. So that's a possibility. So 410 is going to be really sticky. And that's man, that's just there's just so many. If we go look, resistance right there, resistance, and when we chopped around the chop box, you know, that was like 410 right there. 410 like support. So that's going to be a real tough area to break through. 410. All right. Let's see here. Same. The market seems to be in a tug of war. Everyone seems on edge. That is true. And that's why I think the chop box in December might just be where we're headed. Okay. I think you guys are just talking amongst yourself which is just awesome. I love seeing that. Let's see here. Thank you. Thank you. Yeah, I think this is a snowball. I do. At least that's how I talk about it. I think it's snowball. Thank you. I greatly appreciate it. Yeah, cool. I greatly appreciate it. Okay. If you guys don't have any other questions, I finished up my notes for today. Again, tomorrow, I do think we can slowly rise from where we are. I do think that's a possibility. I don't know if it's going to be, you know, anything monstrous to take us up. Like the Qs being up over a percentage point today. You know, I think that's like a max type move. But also we have to remember with the Qs haven't even reached their 50% retracement level yet. I think everything is just going to, again, tomorrow being Friday, everything is going to depend on what the inflation data looks like and how consumers are feeling. Those are the two big things to watch out for tomorrow. And since we are under the lower end of the weekly expected move, I think we still, as long as news is good with inflation from the PPI report and with the Michigan Consumer Price Index, and that's the preliminary, as long as that is decent, I think we're going to just slowly move up to the lower end of the weekly expected move. That's 285 for the Qs. For the SPY, it's 400. Okay, that's where the lower end of the weekly expected move is, 400 for the SPY. I think it's 405 for the SPX. Yep, 405 for the SPX. Even though the SPX kind of hit a wall here at 39.55, which is a sticky point. And I would have to add that for the SPY, 395 is a bit sticky too. So maybe we fall somewhere between that 395 to 400 on the SPY, the 39.55 to the 405 on the SPX. You know, it's real sticky there. There's a lot of chop. And, you know, looking at the Qs, there's a lot of chop, you know, right around that 280 to 285. We can see it going back, you know, a month and a half. We've basically been moving there, and then we get a little gap, and we were back up there again. So it's real sticky. 280, 285 for the Qs. The IWM, let's pull that up. We haven't looked at that even today at all. Yeah, it just down and up, and man, looking here, the lower end of the weekly expected move is 184. I don't know that we get there. We've got this interesting combo. It's basically looking at the candlesticks right here. We've got this huge wick on the top yesterday, hardly any wick on the bottom, very small. And then today, almost equal wick top and bottom, very small. That's a doji candle, which are neutral, meaning the market doesn't know which way it wants to go. So a very neutral market right now. And I think that's because some of the bad news of inflation and so forth have kind of already been priced in with the drive down that we had, going back, to Monday and Tuesday through even Wednesday of this week. And then today we get a doji candle, which is indecisive. It means we don't know which way to go. So yeah, this is you are perfect. You've taken what I've been saying for days here, and you summed it up really, really nicely. Just too many. Oh, and then I get a in the way. Just too many variables. Jerome Powell, CPI, tax loss harvesting, which we can't forget about, seasonality. It's a tough trading environment. It is. I'll wrap it up with that. Perfect comment. Just absolutely wonderful. You've really summed it up nicely right there. Just so many variables. And that's one reason why I think we just move sideways. We're going to just chop around like we have for so many days. All these sessions where we chopped around going back to the beginning of November, we're just going to continue that. The market's going to be undecisive. When it gets big news, it's going to rally. When it gets bad news, it's going to fall. And it's all going to stay within a very tight range. Okay, well, good luck with your trades tomorrow. Thank you for joining me today. I greatly appreciate each and every one of you. I'll be back tomorrow after the market is closed to talk about what happened, why it happened, and what to expect going forward. And if you do have a ticker request that you want me to talk about, leave it in the comments, just like we did at the beginning of this video. We can talk about it. No problem. I'll do the research and figure out what's happening with the company, and then give you my report on that. So that's no problem. Make sure to click that like button, share this video. I know it's odd to hear say, but it does really help. It lets YouTube know that we're here, and more can come join in the conversation, which I absolutely love. Thank you so very much for joining me. And I'll wrap it up now. You have a wonderful, wonderful day tomorrow, whatever it brings us. And know that you are awesome. You're appreciated. I love spending my time with you on these live streams, and I'll see you tomorrow.